leverage, lot size, balance, equity, margin, free margin, margin level. Now, the relationship between leverage and you making money, also looking at the lot size that you're going to use. I want us to understand what is happening here so that you make the best decision for you to trade. Right now, when you are actually going to be trading there, you're going to be trading based on what? Based on margin. You're going to be trading based on what? Based on margin. You can see here we have a margin of 2. We're trading Euro USD and USD ZAR. Now, the leverage, it's here to divide the actual money that you actually need to pay. In this case, you can see here we have $2. If you can see, we have the account is based on what? Is based on the $2. Right? Okay. I believe it makes sense. We understand and moving along. Now, when we're looking at the calculations, the relationship when you're making money, remember when you have to make money, here's something that you have to know. Right? This is the price where you went with a buy. Right? This is the price. And this is the current price where the market is moving. And this price is what? Moving up. As you can see here, we're profiting. However, this one is moving down. You can see here we have 5.3. We have 3.8, which is moving down instead of it moving up. Now, if you minus these two prices, you will get a certain number. So that's why we actually have what? We have a loss here. To count that, it's simple. However, we're not here for that. I want us to understand leverage. Leverage is here to divide the money that you need, meaning that you're going to be trading based on what? Margin. All right. To count this is simple. When you are trading, remember, keep in mind that leverage is what? Dynamic, meaning that it can change depending on the broker that you'll be using. And then the broker is going to set some parameters for you to understand that, okay, during the news, which is fundamental trading, if you're a fundamental trader, the broker will actually state that they're going to change the leverage based on that you are actual what? You're actually trading what? The news, which means they're going to change the leverage. And let's take a look here. Here we have what? Leverage, currencies. We're trading Forex mergers, all right? Lots. One lot, from one lot upwards, we have 1 is to 1,000. From 5 lot, we have 1 is to 500, which is maximum 10 lot. So these are the parameters that I'm talking about here. Even metals is the same. So if you're going to be trading based on understanding that leverage is there, and leverage can change depending on the broker, but there are some brokers which they offer fixed leverage. Right now, the actual money that you need for you to trade, let's say right now you're trading Euro USD, and for many traders, they might not be aware what's happening here with when they are trading the Euro USD. Now let me show you. You can go to Metatrader 5 very quickly, and then you're gonna tap, maybe let's say tap on USD ZAR. You're gonna go to properties. Under properties, this is what you will see: the contract size, which is what? 100,000. I believe everybody can see the contract size here. Now, when you move down, you will see what we have. We have minimum volume of 0.01. So that's what we're going to use to do the calculations here. Now, on the 0.01, it's going to be what? 0.01, which is our lot size that we're going to use. Lot size, right? And lot size, when we're trading, we need what? We need price. Here we're doing the calculations so that you can understand the calculations that are involved in trading. Should the leverage change? And the leverage will, the margin, also the margin here will keep changing based on what? Based on this price over here, because the price will keep changing. You won't buy the same price as like this one. Now, you're going to say 0.01, right? 0.01. Just what you're going to do the calculation. 0.01 times what? Times the 100,000. Times the 100,000, which we want to find what? The number of units. In this case, we get what? Which is times by 100,000. We get what? 1,000 units. So in this case, we are buying 1,000 units. We are buying 1,000 units. Right? Okay. Now, if we have 1,000 units, we want to find the actual money that is needed. We're going to use this price here. Since I've mentioned that the price will keep changing and will not be the same. And right now we're counting for what? We're counting for USD ZAR. So we're going to use that one price that is below. So in this case, we're just going to say like this. We're going to say 18.65.316 times what? Times the 1,000. Let's make the 1,000. Sorry, let's just do the calculations again. It's going to be what? It's going to be 18 point, we're going to do them together, 65 and 316 times 1,000. And then we get what? We get 18,653.16. That's the amount of money that we get. And then we can put it here, which is 3.16 rand. This is the money that you need. And now, for you to convert this money, you're going to what? You're going to divide. And divide, it's not necessary for you to divide, right? You're going to divide with what? With this very same price, right? It's going to be what? 18. Why are you dividing it? You want it to be in what? In US dollars. Because here you're using what? US dollars, right? And then you're going to say divide. The divide is going to be what? It's going to be 18.65 316, and then it's going to give you what? It's going to give you $1,000, right? Now we're in $1,000, meaning that right now the money that we need for us to open 0.01 is $1,000. So you see now the money is what? Is too much. It's expensive for you to actually have this amount of money just to open this lot, because with this lot you can make a lot. Now this is where the interesting part comes in play. The leverage. Let's say right now the leverage is what? You're using what? 1 is to what? Or let's say 1 is to 1,500. And then we're going to say divide by what? 1,500. And then we're going to get what? We're going to get 0.66. And we want what? We want two numbers after the comma. And after the comma, we have 0.66, which we can put what? 7, because after the 6, we take this number and then we make it what? 7. So you need only $0.67 dollars. And it's $0.67 times by 18.65316. That's what? That is 12 rand. 12 rand 50 cents. That's the amount that you need for you to actually what? Trade now. So the relationship here of the leverage. Now let's say you have that 12 rand, which is equivalent to what? Which is equivalent to 0.66. I believe we are together on this one. Now, this 0.66. Now you're looking what? You're looking to make profit. So now you're going to take this price and minus this price, right? Taking this price and minus this price, you're going to get a certain number. However, I mentioned that we're not here for counting that. We're here to look at the relationship between the leverage, lot size, and also the balance. So once you have the 12, remember, let's say right now you have this 0.60, which is 0.67 dollars here. Let's say you are at the balance here. You don't have this amount of money. Now, the equity will keep changing based on what? Based on the profit that you actually have. So it's going to be plus equity, which is to say in this case you are profiting 2, and then we are going to be profiting 2 plus what? Plus 0.67, right? Okay, you're going to have an equity, which is good. And then margin is going to be needed with what? It's 0.67, right? And then if you have 0.67 here, what will happen here on margin level? You're going to have what? 100% margin level. Here is going to be what? It's going to be 100 instead of this number that you see. And once you have 100, remember you're going to get what? A margin call. You're going to get a margin call, because if you're going to get a margin call, it's a notification that your account is below the minimum amount of money that is needed to maintain the 100 plus leverage. Margin level. Now, once you add 100, the free margin here is going to be what? It's going to be 0. It's going to be 0. Okay, we understand that it's going to be 0. We have no issue. In this case, we're going to experience something like this. Let me show you here. This is a different asset. And this is something that I wanted to talk about here. You see here we have 0.64, right? And we actually have an equity of what? 0.22, because we are losing already. So it's going to be minus this one, and then we're going to be left with the equity like this. Now, on margin, we needed 0.23. Free margin is 0.01. Free margin is what? 0.01. Okay, margin level is 95. Now we get what? Margin call. So now we're trading what? 0.05. This is a different asset. It's no longer with the ZAR, different leverage. Okay, so this is this demonstration for you to understand that when we are trading here, you get margin call, and after the margin call, should your account lose, let's say, 50% of 0.0767 or 12 rand, they're going to close this order here automatically without you doing anything. So in this lesson, what you actually have learned, or that you actually might actually have learned here, is that the leverage is going to divide how much money you're going to need, and the relationship between you making money is that you're going to be making money based on these two prices and asset that you're going to trade. Also, the lot size is going to increase how much money you're going to make and how much money you're going to lose. However, keep in mind that the leverage is here to divide money that you need, and you're going to be trading on margin. So you must be careful of the calculations. Should you have less money to trade? In this case, you have $1, $10. So you must be careful of how you're going to trade, right? And then there's some calculations that are involved in you adding the stop loss. So those are the calculations that you must actually know. And knowing those calculations is knowing that, okay, if right now we have 0.66, how many points is 0.66? You can easily use your MT5 or MT4 to do the calculations, minusing the two prices, right? Minusing two prices. In this case, you can convert 0.66 to points. Using what? Using the stop loss that you're going to use. Let's say right now you use 100 points. And 100 points is what? Is equivalent to $1. So you see now you cannot longer what? Have 0.66 for you to trade this lot, 0.01 lot size. So you need to actually add more money. So this is what you have to know about the leverage and how you make money in forex trading. The leverage is there to access you to actually what? Have less margin needed. At the same time, you must understand that the more you have less margin needed, you must also understand that the market on its own has its own risk. The broker has its own risk. You must also have your own risk plan. That's what it is that you need to know, and be blessed.